Hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. I'm going to get you folks what you need to know before you roll, and that's going to start out with talking about the economic data, see how that impacts the overall markets, maybe sprinkle in some geopolitical fodder to round off that market analysis, and then talk about some option strategies we could implement into our portfolio based on the assumptions we come up with there. All right, so without further ado, let's get on with the economic data. We've been talking about manufacturing sector, right? Durable goods, all of those things. We saw a little bit of what was somewhat expected with durable goods orders doing well when you strip out the travel and industry. Well, we saw GM come out, some of the car auto dealers coming out with better than expected sales, despite the fact that they don't have a whole lot of inventory. They're doing okay. Another side that we saw with this manufacturing sector, Richmond Fed coming out better, but today, we're seeing wholesale preliminary inventories coming in higher than expected at 2.3%, expected to be 1.5%. Folks, this is not the time of the year that we start really seeing inventories start to build. They want to see the building of the inventories headed throughout the summer, maybe heading into the fall. That's getting ready for Christmas or the holidays. Not necessarily right now. They're expecting demand, and it seems as though we're seeing a little bit of a pullback there with these inventories building. Pending home sales going to be coming out a little bit later on today. Something with that number, the the new home sales we saw come out a little bit lower than expected at 763,000. Is that because of the higher interest rates? Well, they've signaled they're going at about 50 basis points at a crack, which I think that it's just a little over the top. I don't think that they're going to be able to do that. And with that said, I think that folks are really, if they are thinking about buying a home, very interested right now because they see these interest rates start to climb and they can't afford as much of a home with that kind of dynamic. And that is going to be something we're going to keep an eye on, as well as these home prices come on, especially the new home prices. You got to think about those houses have these products going into them that are at very elevated levels. So the margins are going to be getting crunched if they can't sell those for an incremental higher in this tightening type of environment there. All right, so let's get on with overall markets, talk about them, see what's going on there, and see what we can talk about. We've got the 50-day simple moving average showing real resistance against the crude oil inventories here. A lot of things going on with this, Russia being a big supplier of crude oil to the broader global markets. They've been kind of getting shut down here. Everybody talking about sanctions against that. That's going to drive demand for everybody else, especially here in the United States. Lack of supply and the continuing demand should drive this price higher. Not what we really want to see, because that causes folks to pull back on spending around this type of asset. Because what happens is if you have to spend so much money in your gas tank, you can't spend it elsewhere, and that really causes problems in the overall markets. Now, bonds moving a little bit higher the last couple of days, and I've talked about this. This is one of those things where you really have to fade it until you hear the Fed say they're going to start pausing. If they're going at 50 basis points at a crack, for one, they're going to overdo it. We're going to be able to take advantage of that. But with that said, a 50 basis point move at every meeting, basically, and maybe even throwing in a 75 in there to really just clamp down on the economy. Well, the bonds really just don't have a ton of room to the upside. Another thing with the overall equities that we could be talking about here, I'll talk about gold finding a little bit of bottom. Strengthening the dollar is going to cause weakness here. I think that we're going to see another rebound of investment into gold as the equities start to roll over. And why do I think the equities are going to start to roll over? About Bitcoin not going anywhere. VIX spiking, that's one good clue. But equities are starting to roll over. We've broken past some of these major support areas that we were talking about. And usually when we see the market start really getting overextended here to the downside, which is what we are seeing outside of the value area here, is one of those key areas that we're looking for. We get extended past this value area, and the next line in the sand is what I'm looking for, and that is for the Dow Jones Industrial Average is going to line up right around there at 32,000, let's call it 300 would be a place where I would start to look for the market to start to slow down. Why are we seeing these markets acting this way? Yes, there's a lot of global tensions going on, but one of the key aspects here is, what do you do when you see somebody that is needing to get out of a trade? Well, being on the floor, we got to see this a lot. You could see people's faces when they started panicking, if you will, and getting ready to offload. As a matter of fact, there's a story, a trader, a friend of mine that was in the pit. Well, his dad was a big time trader. As a matter of fact, he even had a clearing firm. Well, this guy had a position that was really going against him, and his dad walked into the pit and literally said, "Are you out of that position yet?" And he said, "No. How am I supposed to get out of something like this?" And showed him his position. And we were spreaders, so we're buying some, selling a different month, and creating that spread based on probabilities of Fed moves. Well, his dad just looked at it and goes, "Oh, that's pretty easy. Where's Jan? Boom, 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 boom. Where's Feb? Boom, 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 boom. Selling those. Where's March? Boom, 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 boom." Basically blew him out of a position at the worst levels he probably could have. Get out of the spread, probably got some better pricing, but this guy blew him out. So yes, when you see people panicking, what happens? Well, when we knew what was going to happen, we knew this guy was needing to blow out of a position. What happened? You're 4 bid? Oh, no, I'm 3 bid, right? You at 5? No, I'm at 6. Okay, so the bottom line is similar situation, but on a grander scale is what we're going through right now with the Fed. If they've got to unload $100 billion worth of assets per month, how long and how many trillions of dollars, how many years is this going to travel? Well, if you're a buyer and you know somebody is offloading, what do? You're 4 bid, 3 bid, 2 bid, 1 bid, and you are not holding your line. You are waiting till somebody comes to your levels, and you're continuing to buy, maybe small, but waiting for that area where you can start to feel that momentum start to turn. And that really isn't anywhere around the corner if we're talking about the Fed offloading that many assets going forward. So equities are just really going to struggle right now, trying to find any type of bottom here, with folks that are asset buyers knowing that there's a big seller in the market are going to continue to drop their bids. And I think that we're going to continue to see weakness in equities as long as the Fed is talking about higher interest rates, especially as aggressive as they're talking about. I'm thinking if they were talking about 25 basis points, that might be a little less intimidating. But when we're talking about these 50 basis points at a meeting, well, the folks also looking at, all right, higher interest rates, that's going to slow the economy. These guys are selling into this market as well, and we are basically falling over each other to sell right now is what it feels like in the markets. So we're going to have to wait for any type of support here. I talked about this yesterday. Any of those stocks that we're starting to find key candles that we would look for at the bottom of a move, being, the dojis that look like, the candle dojis that look very similar to this, or being in red, which a couple of them were, many were gapping down, even where we were seeing the markets find that kind of support. I said, wait for confirmation. Well, what happened? We didn't get that confirmation yesterday at all. As a matter of fact, the markets continued to the downside, totally breaking that entire pattern. So looking for being aggressive right now is not the play, folks. Right now, we need to wait for confirmations on any type of support. Otherwise, we are going to be needing to sell into the rips with covered calls, looking for opportunities to sell some puts. It's going to be a situation where we're looking to collect premiums because volatility is so high right now. We already saw what happens when volatility comes out. Just a couple of days ago, premiums just completely imploded. So stay away from buying in this environment because volatility is already so elevated that it's going to be very difficult to get anything done. And again, E-mini S&Ps continuing on their march to the downside, testing this value area low. Do I think it's going to support here? I don't. I think we're going to see continued, like I said, weakness, yeah, we'll see a couple of pops here and there. But I think that overarching, until we see some real kick, we're not going to get a turnaround here because the big players in the game know there's even a bigger seller right around the corner looking to offload its entire portfolio. So that is not a good scenario. When there's sharks in the water, they're going to be eating on some of these folks that are weak hands, like the Fed that we know. All right. So that's all I got. I would stay away from anything that is going to be very closely related to, say, energy right now. The other thing, travel and leisure is not doing very well. We're starting to see the other rounds of lockdowns in China. As a matter of fact, I just started talking about how we're seeing the prices of shipping going down when you're talking to China. Well, there's a bit of a disconnect here. China is lowering overall shipping quotes coming out of China. Well, in the meantime, we're seeing these cargo ships stacking up like we saw in the pandemic here in the United States around LA, San Diego, Houston. Well, all of that is really starting to show up again now that we're tracking these tankers outside of Shanghai. They're not looking like they're coming into port really. So are we going to see another round of China shutdowns where basically manufacturing is not going to be leaving? That is major for pricing here in the United States and inflation, because if we have to start producing elsewhere, those prices of the inputs are much higher and the cost of the goods sold are going to be much higher as well. So stay away from that margin compression type of environment for some of these companies. All right. That's what I got right now. We're looking for a support, but in the meantime, it's steady as she goes, looking to play to the downside. All right. That's all I got. You guys have a great day. And if you can't take that, take it easy.